very good day to our listeners. Hope you all had a fantastic week so far. Going to recap some of the major themes from this week, and there's only really one thing to talk about, that being Ukraine and the effect that it's had on the market, particularly it being very news headline driven at the moment, with actual physical tension growing from military confrontations to massing of troops on the border and very aggressive rhetoric coming out of both Russian and Ukraine counterparts from the most highest level, has caused a flight to quality bid in the various asset classes. We've seen spot gold, that's moved back above its 200-day moving average on that key $1,300 level line. We've also seen, to put this in some context, the Russian stock market, that being the MySex, is massively underperformed here, down around 5%. That comparative to gains in mainland Europe of around 1% in likes of Germany, France and the UK. Why has this happened? Very much because the threat still of the targeted sanctions which the White House has announced on Friday in discussions with the UK and Germany and Italy and other major powers looks to further impede their economy, continues to lead to that move and also weakness in the Russian ruble. Otherwise, some of the other key things from this week have been corporate earnings, in particular in the tech space. One good, one bad, one being Apple. They exceeded expectations, as is normally the case though, but they did announce a huge increase to their buyback, a 7-for-1 stock split, iPhone sales still exceeding expectations, and they have outperformed the market throughout the week since that corporate earnings report. On the flip side though, having already gone through the European cash equity close here in London on Friday, we have seen the Nasdaq underperforming now, looking to close out the week after Amazon's earnings were very disappointing. They are seen down individually close to 10%. Looking forward now into next week, the key day to be aware of here is Wednesday. A number of key events including US GDP, ADP, which comes ahead of the non-farm payroll report on Friday, but we also have the FOMC interest rate decision, of course, which will be monitored very closely to gauge still this time frame between the end of QE and tapering and the first interest rate hike from the Federal Reserve. Also, as well on Wednesday, we have the Bank of Japan interest rate decision. That though concludes a wrap for today. Things, as mentioned, very Ukraine focused. Keep an eye out and an ear open for things over the weekend, as we are expecting further Western targeted sanctions on Russia to be announced in the coming days. But have yourself a fantastic weekend.